To this panel at the Open Business Council Summit on centralized finance versus decentralized finance, digital assets and non-fungible tokens. My name is Hirander Misra. I'm the chairman and CEO of GMEX Group and SecDex. I've got with me an amazing panel today. And again, I'll let them all briefly introduce themselves and their kind of angle on these particular areas before we dive into questions. Ladies first, Melanie, we'll start with you. Melanie, you're on mute, I think.
Muted me? What?
Yeah, someone's got to do it.
So okay, now I unmuted myself. So very happy to be with you all here. I'm Melanie Morh. I'm the CEO and founder of Warm Protocol, but also the CEO and founder of a social commerce platform called Yay. I'm actually currently in LA, calling in from the other side of the planet, and super excited to participate here as my company is also in the blockchain and crypto space. We have also issued an own native token and therefore have seen now the industry evolving over the last couple of years. But I'm actually coming out of 20 years of media and marketing and mobile technology. So a mix of media marketing and tech already since more than 20 years. And very excited to participate today in this excellent panel.
Thank you, Melanie. Very early for you as well, or the early hours of morning, or late, should I say. And Khalid, over to you for a brief introduction as well. Welcome.
Yeah, thank you, Hirander. Delighted to be with you. I'm Khalid Saad, based out of Bahrain. I'm a board member of CoinMENA. CoinMENA is actually one of only two exchanges, crypto asset exchanges in the whole MENA region that are fully regulated. I also sit board of an angel network here, the largest one in the region, called Oqal. I do a lot of work with startups in terms of helping them raise investments on their market entry strategies. I also do work with the Chamber of Commerce, and I'm also a advisor to one of the largest digital transformation companies in the region.
Great, thank you. Bahrain is certainly an interesting area in terms of digital assets development. You know, there's been some recent dialogue we've had there, so very excited to have you on the panel. Over to you, Xavier.
Hi, everybody. Very happy to participate at this outstanding panel. My name is Xavier Gomez. I'm former international banker from Credit Suisse, and I'm co-founder of Invyo. Invyo is a specialist of managing data for companies dedicated to financial services, banks, insurance company, private equity firms, consulting firms. Invyo is a leading platform that combines semantic analysis and machine learning to enable all company size to create value leveraging their external and internal data.
Brilliant. Welcome. And Max, over to you.
Yeah, I'm very honored to be here. Good morning, everyone. So as you can probably see, I'm in Frankfurt currently. I started my career as a management consultant, then transitioned my career more into finance. So I worked afterwards in the private equity sector for a couple of years, and then transitioned my career again. Went to the fintech space, found it extremely interesting, was very passionate about alternative finance and alternative assets in particular. So I fell in love with Ethereum, and that's one of the reasons why I founded Iconic 4 years ago. And with Iconic, on the one hand, we are an early stage investor into blockchain startups, and on the other hand, we are a crypto asset manager who issues regulated vehicles which have crypto as an underlying. At the moment, we have offices in New York, here in Frankfurt, and in Dubai. And very, very happy to be on this fantastic panel.
Great. Welcome, Max. And it's an exciting space in the area you're operating in. So look forward to hearing about it. And Peter, welcome. Last but not least, over to you as well for an introduction. I think you're on mute, Peter.
Can you hear me?
Yeah, we can.
Here I am. Okay. My name is Peter Kristensen. I'm the founder and the co-CEO of JP Fund Services. I just moved from Florida to Portugal, but at the moment I'm based in at my place in Copenhagen. JP Fund Services was started in 2007 as I would say a fund specialist creating hedge funds. I think we've been involved in around 220 plus hedge funds in different assets. And since then, we actually changed a bit of the directions of the company, and we're building an investment, I would say, fractionalized portfolio management system where clients can actually design their own portfolios based on professional-run hedge funds or portfolios in itself.
Yeah, brilliant. No, really exciting area. And again, look forward to hearing about it. I mean, on that note, we'll dive straight into some interesting questions. I mean, the Open Business Council, often talks about the fourth industrial revolution and, how new technologies are kind of enabling certain sectors. I mean, recently with GMEX, with industry participation, we did a paper on Exchange 4.0, which spoke about, I mean, not necessarily kind of digital exchanges, but more that network effect between participants and the ability now to harness new technologies like blockchain to affect transactions, almost going back to the age-old way of barter, but digitally in many ways, and that kind of network effect. We've also seen, obviously recently, last week, the Coinbase IPO, and it was much hyped as well. So I guess, bearing all of that in mind, we've certainly seen a lot of institutional interest in digitization, digital assets, and obviously, there seems to be now, renewed interest in a number of areas, whether it's banking, asset management, exchanges, as far as digital asset development is concerned, even with the traditional players, not just Neo. So, I mean, Max, do you want to talk about how this is taking hold? I mean, whether it's here to stay as well this time, given that institutional involvement, and how you see that playing out in this space in terms of key hot areas.
Yeah, absolutely. I think, first of all, we have to maybe differentiate between asset management, banks, and exchanges. I think in the asset management space, that's actually, for me, the most exciting part and one of the reasons why I'm here and why I'm working in this space. I think tokenization of assets is finally the point where investors can really diversify their portfolios in a realistic way. Because nowadays, I mean, if you look at the endowment model in the US or also at family office models, you can clearly see that they have allocations, for example, to illiquid asset classes like private equity, like venture capital, like direct real estate, arts, also other exotic asset classes. And today that's not accessible for a retail investor because it's not fractionalized and it's not fungible. That's a huge problem. I believe if we create a global fungible market through tokenization, we can trade everything against everything. I could today own, let's say, 1% of a Picasso painting and just exchange that against, let's say, 250 Amazon shares, for example. And then another day I could maybe exchange that to 10% of a Mercedes old-timer. As you can see, I have a German bias here. And I believe that really creates an opportunity for everyone. Even if you can just invest, let's say, 10 or 20 euros a month, you can diversify your portfolio in a perfect manner. And you can finally really have a balanced exposure to all asset classes that were not available before. And that's what I find the real beauty about asset management. When it comes to banks, I think they really now have to get, for example, in Germany, we have the crypto custody license. I think it's extremely important to have that, because in the future, I believe that all shares, of course, as well, all financial instruments will be tokenized. So you need a wallet infrastructure on top of your core banking infrastructure. I think you have to offer those payments, because payments today, they are global, they are borderless, and I think every bank should be part of it. And I think one of the most interesting areas are probably exchanges. I'm still not sure if the new incumbents, like, for example, Coinbase, will win the race, or the old incumbents, like, for example, the Deutsche Börse, so the German stock exchange.
Yeah.
Because, I mean, for example, this German stock exchange, they already have a blockchain framework. They already have the technology to actually trade tokens. And they are, at the moment, the marketplace which the banks are used to. So I personally believe that those players, the banks and the exchanges, will agree on a common blockchain framework where they will actually trade tokenized financial instruments. There's no need, in my opinion, anymore for a clearinghouse, for example, because clearly, clearing and settlement is native to the blockchain. And also, why do we need a market maker? Because today, if you're familiar with Uniswap, you can see that liquidity pools can get created, and actually the market making is done through algorithms and smart contracts that actually manage the price for you. So I personally believe that we will not have a completely anarchistic, decentralized world, but I believe that the intermediaries have to change their position. I would phrase it that way. They have to reinvent themselves.
Yeah, this is interesting actually. And before I open it up to the other panelists, just to state whether they agree with that or there's some counters. It's really interesting because everyone speaks about the need for no longer a need for clearinghouses, but there's also counter view where recently given that crypto asset activity is fragmented, there's multiple walled garden exchanges and allocating kind of credit's cumbersome. JP Morgan a few weeks ago spoke about the need for a clearinghouse in this space, and of course you've got traditional infrastructure in that space that's kind of decades old as well. And then obviously you've got now what I call the neo infrastructure with multiple blockchains as well. So it's interesting to see what the other panelists think around that coexistence, and also whether they agree with what Max is saying, with that degree of decentralization and less need for kind of traditional infrastructure, maybe. Anyone want to come in on that point?
I would say, Max, you're absolutely spot on. There's on the STOs, and the STs, the sky is the limit. What you can actually diversify when it comes to asset management, and it's going to open up a whole new world for what I would say us normal people, where you don't have to be diversifying your portfolio. You have to have $1 million to enter a Vanguard, whatever portfolio, but you can actually fractionize it. So there's so many opportunities. What I think it's going to take a lot longer time to actually implement these things, because we all think about the front end. How can we actually participate in this? But it's all about being in the fund business for quite some time, and especially on the fund administration. It's very, very often with the regulators, with the reporting and registrations, and all these things. How do we do this? And when we first have that, the sky is the limit.
Yeah, this is a really interesting point because, of course, we're speaking with what we do quite a lot to the banks and a number of players on the asset management side. And even though there's a will for many of those to get into digital assets now, they need accelerators. But the issue is they just can't necessarily just connect into a Fireblocks or other networks, because they need to see how that kind of relates back to what they're doing within the bank, whether it's a single view of net asset value, or whether it's, as you rightly said, Peter, whether it's the order management systems or the fund administration side. So I guess how do we bridge those silos as far as that's concerned? And just related to that point, I guess it'll be relevant for Khalid as well. Recently we've been having dialogue with some of the Bahrain-based banks whose customers are asking for digital assets. Obviously, they've been used to mobile money and mobile wallets for some time, but they're kind of saying, okay, we want crypto, we want tokenized gold, we want tokenized securities, and our digital wallets, it shouldn't really matter what it is. We should be able to hold it. We should be able to transact off it as well. So again, does Khalid, do you have a view on that as well before kind of the wider panel talks about that bridge between traditional and digital assets?
Yeah, I think, to your point, there's been, I'd say, a lot of soul searching over the last few years, especially in the region when it comes to crypto assets and digital assets. And I think if I speak from a Bahrain perspective, because, I was party to a lot of these conversations over the past few years, the stance is, from even a regulatory perspective, is that we need to start embracing this. We need to start understanding it, and we need to see how we can start rolling it out. Whether it's, first of all, through a centralized means, which is the exchanges, and obviously this is something we can talk about later, but also more so now, how do we start exploring the tokenization angle? And given that this is something that is of interest for regulated financial institutions. Their obviously clients are asking for these digital assets, and now with the widespread acceptance globally, and big tech and some big financial institutions globally starting to embrace this, they obviously want to also understand how they can be part of it, obviously within the means of the regulatory framework of the jurisdictions that they're dealing with. So that's the sort of conversations that are actually taking place. I think for us here, we've taken that first step, but it remains to be seen what happens in other jurisdictions, I think, in the region for it to take off. But I think it only takes 1 or 2 jurisdictions to really jump on the bandwagon in line with what's happening globally for the rest to pick up. But these conversations have started. People are definitely interested in crypto assets, even those that had absolutely no idea about crypto or digital assets before this year are now definitely wanting to be part of this game. And so institutions are now looking to diversify also by offering them something. But that is at a very, very early stage.
Yeah, just one quick on the point you made there. I mean, obviously Bahrain's establishing its own framework, but at the same time, we've also seen ADGM and a lot of things happening there. Dubai now is going to establish its own framework as well. So the regulators, across those 3 kind of jurisdictions talking to each other, what level of competition and competition is there really when we look at the dynamic regionally? And obviously Saudi Arabia's, I mean, not necessarily announced digital, but they're keen to see what they do in terms of innovative finance and fintech, of course, as well.
Yes. So if you look at, for example, the Central Bank of Bahrain, Abu Dhabi Global Markets, and the Dubai International Financial Center, the DIFC, I mean, they all talk to each other. They're part of the global GFIN network that looks at innovation. Obviously, I think what we also have to keep in mind as they talk to each other, the central bank, for example, is onshore. It's a national regulator that oversees all aspects. ADGM is obviously a regulator in a free zone in Abu Dhabi, and the IFC in Dubai. There's obviously conversations going on. You've also got the DMCC in Dubai that is also working with the securities regulator. So it's trying to find a way where all of these different, let's call it, jurisdictions can talk to each other in a unified way. I think we're still way off from that. But I think what is healthy is that all these different jurisdictions are realizing the importance of this. And so it goes from a question of, you know what, we're not going to touch it. We don't want to hear anything to do with crypto because it's a national security issue from a financial perspective, to, you know what, we need to start embracing this. We need to start looking at it because we need to be at the forefront of the digital economy. So Bahrain and the UAE specifically within the region are taking the leading role in terms of exploring this from a regulatory perspective, from an application perspective. Saudi Arabia has obviously taken a more cautious approach in terms of understanding how this could be regulated, what its implications. Having said that, actually, speaking of Saudi and the UAE, they actually created a currency, they call it Abr, where they want to actually settle trade between them and a digital asset. So probably in the absence of a regulatory framework, they're still dipping their toes in terms of digital assets or crypto assets. And I think the moment you have 1 or 2 jurisdictions that have a very clear view, and obviously the benefits are evident, others are definitely going to follow suit.
Yeah, no, great. No, I'd agree with that. And Melanie, it's interesting. I mean, obviously, before you talk about views, your views relative to what the other panelists have said, I mean, obviously, a lot of the focus has been around Bitcoin and that as a digital asset class, but we're certainly seeing increased interest in other cryptocurrencies, but other types of assets as well. So again, here, where do you see kind of the key interest emerging? And obviously, feel free to comment on what the other panelists have said before I bring Xavier in.
Yeah, when it comes to cryptocurrencies and also, I mean, any other form of digital asset and decentralized finance, I'm actually way more interested in the aspect of how can we get the unbanked banked, and also how they, without any investment, could somehow even participate already in kind of this these opening up opportunities. And that's where it comes to how can you start mining in a totally new way? How is the gig economy that is on the rise a huge driver for allowing people to participate in these new digital asset classes? Just by doing some micro jobs and earning a separate or earning some income with it while they are doing these little tiny micro jobs. And so when I look at Bitcoin now, and we have seen what happened just recently in Turkey, that's exactly what's happening when the regulators are getting in place and figuring out, oh my God, what's happening currently in our country? What's with how is our own currency performing, and how is decentralized finance and how are cryptocurrencies potentially endangering their, or kind of not in line with what they envision the future of their country, where the future of their country should head to. And this is, of course, very, very worrying. That regulators are coming in place potentially way too early, that they are not allowing their citizens to participate in this totally new environment and take the opportunities where they are.
Yeah, no, there's two good points there, because, again, we operate a lot in Africa. And if you look at Nigeria, has done the same thing where they banned cryptocurrencies, because what they found was happening was that there's controls, there's exchange controls in those countries, but then swapping naira into Bitcoin and being able to then get that out because it's more portable was leading to kind of an outflow of capital. And I guess there's interesting ways to try and resolve that, but the extreme was, okay, we don't know how to figure this out, let's ban it. So again, Xavier, you come from the banking side, with Credit Suisse. You're kind of involved in the mixture of kind of emerging and developed markets as well. What do you see in this space? And also, given your background is really, really interesting, because it kind of combines a combination of artificial intelligence with what you're doing with blockchain. And I increasingly see, artificial intelligence as key to underpin a lot of the data analytics and decision-making of smart contracts as they get smarter as well. So again, feel free to come in here on those points.
Yes, of course. And to complete what Melanie said before, what I feel with data analytics from finance sector, in particular bank, people in particular from US, people want a Bitcoin. It's the right time for banks to make the coming out of Bitcoin, clearly. And the big issue for bank, it's clearly to answer to the request with a problem of compliance, because they don't have the right IT infrastructure. They don't have the expertise, and clearly they don't want to promote and propose a product, a financial product. They are not in their values. This is the first. But when you look the different survey, for example, a survey has been made by Cornerstone. How interested in your financial institution in providing cryptocurrency investing in services? People answered at 79% not interested. But in terms of consumers want a Bitcoin from their banks because they have more security from their point of view. And 50% of US consumers own Bitcoins or some other forms of cryptocurrency. And clearly, consumers won't buy Bitcoin in the mode test and learn, but in their own banks. This is only millennials or geek people or people more or less informed. They want to buy on Binance, BitNext, or Coinbase. This is a very interesting because you see an interest for Bitcoin. They're ready to take the risk, but on their own banks. But unfortunately, their own banks does not provide this kind of service as today. Only for ultra high net worth individual or high net worth individual. And now, your question regarding the AI, the blockchain, and all the relation with digital assets, it remind me Apple Siri. Apple Siri is a great example of AI and big data impacting our personal lives. As millions of people interact with Siri, the AI is learning and improving its accuracy and breadth of knowledge each day. And in fact, this is what the internet did for communication. Blockchain, for me, will do for trusted transaction, clearly. And as you know, blockchain is posed to the next major disruptive technology for virtually all industry. And what is very interesting, when you take an example on payment, when I purchase a cup of coffee on my local coffee shop, I pay the clerk for the cup of coffee. Once the transaction occurs, the transaction details are recorded in ledgers. This is the principle behind the blockchain. And blockchain, as you know, is a distributed database that multi-parties. And the beauty, clearly, on this blockchain, you can put all the data. Each transaction is added on the database, clearly, with and you know all the information about your client in terms of frequency on the purchase, in terms of quantity, in terms of a lot of things, and you can see and you can maybe use when you as a consumer, you give the authorization to use your data in order to improve the customer experience.
Sure, but with that, Xavier, I mean, we all know about that, right? But just to touch upon a point that you made earlier, and this is back to Max, right? With Max, if we talk about kind of the banks, there is a bit of a discord at the moment because we know that their clients are asking for it. We know that, like Xavier said, on execution and offering a product, they're starting with their high net worth clients and other kind of asset managers who want exposure, whether it's Bitcoin and other assets. But at the same time, some of those banks we're dealing with recently have said, okay, in the UK, there's something called 5MLD, which is effectively an authorization for crypto businesses, and some of those very banks, at that kind of transaction banking level, have said, we can't bank you if you're doing crypto. So there is a discord at the moment between different parts of the bank, but even regionally as well. We're speaking to one bank which is very active in the UK and Asia in this space, have a digital custodian, but their Africa business is nowhere near the pulse as far as these developments are being concerned. So how do you see that playing out as well in the next year or two?
You mean in terms of jurisdictions?
No, in terms of take up, because the banks themselves have multiple silos where one part of the bank, again, servicing accounts and account opening won't be banking crypto businesses, yet other parts of the bank are actually putting in place crypto offerings for clients, right? So there's almost different schools of thought that are conflicting within those banks that are trying to get into digital as well at the moment that we're seeing.
Yeah, I mean, first of all, also to Xavier's point, I think it's completely true. I mean, there was a recent survey I think it was in the DACH region, so Germany, Austria, Switzerland, how people want to get exposure to crypto. And the answer was, yes, they want to get exposure, almost everyone, but they don't want to buy the Bitcoin and then have it in their own custody, in their own wallet.
Yeah.
They need a trusted party still. This could be the bank holding it on their platform, for example, in the wallet infrastructure, but it could also be a financial instrument where they have then also it through their broker, in custody. And what I believe, I mean, there are certain things banks can offer. I mean, I already answered this kind of, I mean, first of all, you can just say, yes, you can buy Bitcoin directly in my platform and I'm storing it for you, or you can buy different financial instruments. And this, of course, also, as you said, of course, depends on the jurisdiction. In Germany, for example, both is possible. At the moment, in the US, for example, we don't really have financial instruments, exchange traded one. We just have the Grayscale Trust, for example. And there you, for example, if companies want to get exposure to crypto, they would rather really go for someone who actually stores that physically in a wallet for them.
Yeah, no, agreed. And you know, just to touch upon that again before others come in. I mean, Peter, I mean, you know, again, Max spoke about the decentralized aspects and some of those centralized aspects going away. Obviously, on the fund side, we're seeing a plethora of announcements with. All right, you know, some of them are dabbling into the futures like BlackRock, but others obviously are taking physical exposure here. And Max raises an interesting point because, you know, many of those clients, they don't want to self-custody. They want someone to do that for them. They want to use that as collateral as well. You know, it's interesting, you know, when we speak to asset managers at the moment, all right, you know, let's say you could put up Bitcoin or cash as collateral for other digital assets, but you can't put up bonds at the moment either. And obviously, you know, before we'll solve that problem. But then obviously I also see a world where you can then put up Bitcoin as collateral, you know, to trade traditional asset classes as well, you know, or any other digital asset. You know, at the moment it's a little bit siloed, but how do you see that playing out? And how do you see kind of clients that you're servicing be better serviced in terms of the offerings out there, both yours and others?
Well, I totally agree with Max and also Xavier on certain points. Being an old bank, I've been there for 35, almost 36 years. Then being on the other side of the table, you can actually see all the issues and all the reporting, everything that has to be done. Not that the bank wants to do that, but they have their own regulators that say, you need to do this. And it's all about, in a way, we got to, I would say, segregate the world in age. And I know it sounds absolutely crazy, but this is totally new age. And sorry, I'm an old fart, so I'm on the old one with experience and saying we got to listen to the regulators and the rules and all these things that really needs to be done. And I do believe that it's a matter of trust. You won't get the banks to do this at the moment, simply because you have a wallet, go to my Ether wallet, create it, put in a bit of money, whatever, and you get tokens from wherever it might be. As soon as the value transaction from A to B is validated, and it's two things that we're talking about, being anonymous or having privacy. What's the most important thing? I think it's privacy, but you can't be anonymous. And that's the big issue. If you have a wallet, every single wallet that's actually created has been created with KYC, AML, and KYT transactions, then I don't think the banks have an issue. I don't think the taxations have an issue, because they will love this, right? So I think it's about taking a step back and say, okay, what's needed for the ordinary population to actually participate? We're so focused because we're so involved in this, and the whole world is around digitalizations and crypto and blockchain. But I think we're missing approximately 85 to 90% of the whole world population that's not even there. They've heard about it. They want to participate, but it's, sorry my language, sometimes it's too bloody difficult to get in and to do this and to do that. And they just give up. If we could have all this in place where the banks are, okay, we're happy to do this. All the wallets are whitelisted. We can report this, we can report that. We will suddenly see a mass adoption within inside the financial sectors. Regulators are going to be happy. Taxation is going to be even more happy because they will just be able to push a button and say, by the way, Mr. Jensen, so how much do you have?
Yeah. Yeah, it becomes...
Peter, can I just jump in one thing? Because at the end, it still then doesn't change that, millions or billions of people are unbanked and they don't have what every bank would like to see, running in KYC when you might not even have a passport, or it's just so difficult. So I can understand that. Yes, regulators want to see that whitelisting and want to have the taxes cleared. But after that, especially in countries where we're used to this old paradigm of handling our assets, there is always this moment when you can take out your cash and just with the paper money in your pocket, you can purchase and do and transact whatever you want after paying your taxes. And that's where I think no, not every wallet should be or should not allow anonymity. I mean, it should be possible, just because we need to start also helping the unbanked to get into the system. Else they will be kept out. There will be no movement from opening these systems up to all of these people who really need it. And we're just facilitating to the ones who are already in charge and who have already everything in place to transact with each other.
Yeah, no, this is a really good point, Melanie. And I mean, it's something that resonates with me as well, because, we did a lot of projects over the last few years with smallholder farmers and giving them better access to markets in Africa and reducing middlemen, making sure there's better middlemen where they exist. But many of those don't have, typical addresses or, as you said, passports. One of the guys we worked with that was chairman of the Big Issue, they came up with accounts for homeless people that didn't have an address, so they could be banked. And then, we kind of took some of that knowledge from here in the UK and looked at using that as well. So these are interesting areas because, as you rightly said, what we deem to be typical KYC AML is slightly different in this case, although Peter raises a good point where now everything's immutable and it is traceable in terms of that source of funds, even if you might not necessarily have typical things like passports or addresses. So it's going to be an interesting area. I mean, whether it's that or SMEs in Africa, it's something that we're often now looking at. And Khalid, I don't know, obviously your region's kind of well developed, there's a lot of capital there, but even some of the banks and some of the SMEs we talk to, as well as kind of retail investors, how is that intersection working in Bahrain and that region, and addressing some of the points that Peter and Melanie raised?
Yeah, no, I think these are very valid points, and I think to also Melanie's point, the approach that regulators have taken here with a lot of the trading platforms, including digital asset or crypto trading platforms, is you need to do a full KYC on every single individual that will be onboarded onto your platform. That is a very, very strict requirement, and there's no two ways around it, to put it very bluntly. Obviously, and not only that, you need to also have a very clear source of where you're going to fund that wallet or account, so that everything is pretty traceable without having to do a lot of forensic work, which I can understand, as they're trying to wrap their heads around this new phenomenon. I do agree that there needs to be a way of also liberating such an asset class, so that the unbanked, which don't have access to financial services, can also be part of this new digital economy. And obviously that benefits everybody. The pie becomes significantly bigger. There are efforts to bring the unbanked in via digital wallets, linking them to mobile phones, etc., being creative. I think, what M-Pesa did in Kenya kind of is a good example of how potentially we could include different people using modern technology to track things. So it's at the moment it's access via KYC individual to this asset class, and at the moment, if you're not KYC, you cannot be part of this. At the moment, I'm sure down the line as more unbanked people come in via non-traditional, let's call it banking institutions, alternative institutions that are coming in, being more creative in terms of identifying individuals, we will start to see them also being part of this new asset class. So it's one where you want to roll it out to the masses, help the unbanked, but at the same time, how can you go around trying to identify who these individuals are so that no arbitrary things could happen?
Yeah, I mean, it's interesting because there's no such thing as global regulation. Each jurisdiction has its own nuances, and again, Facebook with DM, when they originally announced that, thought there was going to be a cross-border stablecoin, but we all know there's no such thing as a global bank or exchanges. Again, there's quite a lot. Just looking at some of the audience questions, and again, there's some interesting questions out there, especially as far as decentralized finance is concerned. So I'll read a couple of them out, well, starting with one, and then we'll see how that goes. So I mean, again, as far as this is concerned, people are talking about decentralized finance, but they're saying, again, where does decentralized finance? Stephen Silver is saying, where does decentralized funding, lending leave the future of our banking systems? Given a lot of the nature of banking is centralized. So again, Xavier, I mean, given you were from the banking side, do you want to start with addressing that before we open it up?
Challenging question, as you already mentioned, is centralized. And when you see the reaction of each central banks, the only prepared central banks in the world is clearly China as today, because I don't see, if you see the news 2 days ago, Bank of China is ready to look at deeply Bitcoin as an alternative of digital asset. It's a big news.
Yeah,
it's a really big news. And for the moment, this is the Fed in United States or the ECB in Europe or Bank in England. They are not at this level. For the moment, you have to respect the Basel III. Bitcoin doesn't exist. You cannot put on the balance sheet of the bank. And we will see one day, but when? Is by definition centralized. Because
sure.
You have a central bank decided, and after it will be very interesting to see how the international regulation move on that, and except to change also the IT infrastructure. I don't see a decentralized system for the bank, to be honest, at the short term. I would like, but I didn't see so quickly, clearly.
Yeah, and I mean, again, opening that up to the wider panel, I mean, anyone have a view on that? Because you're right. I mean, inherently, even central bank digital currencies, I mean, given what Xavier talked about, with central banks being centralized by the very inherent nature of the name, but effectively, obviously, they're introducing digital currencies, but effectively, it's a private kind of controlled network that effectively centralizes something that was designed to be decentralized, right? And Hirander raises a point that some of these DeFi plays are, by their very nature, again, almost shoehorned into having large facets of centralization. So again, any views on that, from the panel?
In my opinion, I mean, I think it will be semi or decentralized. Yeah, it will be a mix of both, because I mean, it's very clear for me that probably all the banks will not decide from today to tomorrow that they will work on an public blockchain like Ethereum, for example. I mean, I would love it, but I don't think so. I think it will be a private DLT system. Yeah, if it's blockchain or not, let's see, but it will definitely be a distributed ledger. And I think it will be a private one where the banks and the exchanges are running different nodes. That's at least what I think in our banked world. I mean, Melanie, for example, I mean, you're more talking about the, let's say, the unbanked world, which is also a very, very important topic to me personally. I think that's completely different, because I think there will be a completely independent financial system created, which will be completely decentralized. And I believe that everyone can participate in financial services and also in the value creation along the whole process. But I think that are two very different worlds, and they will both exist, I believe. Yeah, it doesn't matter if we bring CBDC or not. I'm personally pro, but I think both worlds will exist. And also, sorry, coming back to the point with Peter and Melanie, I think your views are absolutely not contradictory. I think that, for example, every wallet in the future will have a blockchain-based global unique identity attached to it, that we have the KYC angle solved, I believe, personally. Of course, it's a long way to go, but I think it will be solved. And AML, which is for me the bigger concern, it can actually be already now scored through blockchain. If you know, I don't know if you know the Blockchain Intelligence Group in Canada, for example, they already have an AML scoring tool for Ethereum and Bitcoin, which is accepted by the Canadian and Swiss regulator. So I think we are actually on the one hand, there are two different worlds that will also coexist, but on the other hand, I think it's absolutely possible to combine those two worlds together.
Yeah, absolutely, guys. Yeah, go ahead, Peter.
Hirander, just I think the technology goes so fast, right? I think there's a solution for that in the future, where it's all about ID of who owns this value. And we all know about why did we do AML, why did we do KYC? And a very good friend of mine from Pricewaterhouse said one thing: it's all about tax. They all want to have that they want to have a cut of what we all make, which is fair enough. But I think there's a solution for IDs and who actually owns the value. Now, earlier on, we had 1-point identification, technology developed and things like that. Within 3 years, we went from 1 point to 4 points ID, right? All sorts of different things. Now, let's look at DNA. Now, just imagine 10 years ago, it took 3 weeks to make a DNA test. Today, you can do it, I've been told, in several minutes, or let's say 10 minutes. That's in 10 years' time, right? Just imagine when we actually get to the point where we can have a smartphone scanning your DNA, which now means you don't need ID, you don't need anything, you are carrying it with you. So this is where you certainly have ID of unbanked people. And I think might sound impossible, but if you look at where we are today and we go back 10 years, we wouldn't believe that we were here today, right? If we go from 4-point, 5-point ID identification to scanning DNA, that solves the solution. We don't need passports. We don't need anything. It is within yourself. Just an idea.
In fact, your idea is to use biometric technology at the end for unbanked people.
The question is just where's the data hosted and who has access to it?
Good question. What about the data privacy? Who uses it?
Exactly.
States, e-commerce,
big tech.
And I think blockchain, if it's implemented in a way that it's good for taxation, but at the end also good for us as citizens, covering where our taxes are going, and if the governments that we're handing over our taxes are still doing a good job, if they are really at our service. And I think this needs to be balanced in the future, because that's the reason why so many people are looking into other ways, other asset classes, and just how to make money, how to survive, how to handle their potential wealth, is just because everyone is so unhappy in many ways across the globe with how governments are handling the money, handling the taxes, and are handling the service that they are delivering. I think there's a huge opportunity for blockchain to bring trust into the system.
Yeah, but I think the vision of blockchain has actually created a monster by itself towards taxations and controlling, because it's much easier for them now. So you can't have the cake and eat it at the same time. So this is seriously Big Brother watching. No matter what we do, there will be a KYT at all times. So it's when we say A, we got to say B as well. But yeah, who controls it?
Yeah, I mean, this is interesting because, unintended consequences, Max mentions, Ethereum, but, we've got multiple blockchains now. We've got fragmentation. On the other hand, you've got traditional infrastructure. So effectively, I do agree that for the foreseeable future, given it's evolving, we're in one big experiment that it's going to be hybrid. So, and again, it's been interesting because some of the audience, they're really interested in, how do you solve kind of international accounting standards? How do you solve some of this KYC? How do you weed out bad actors? I think, a lot of the points raised are interesting because with this technology, with coin forensics, with combining biometrics, we can get a better view of this than we can in the kind of traditional financial system. But I guess it's all about adoption and I guess who drives those standards, because at the moment there are multiple standards and there's multiple ways of doing things. Even, I guess, Max, you're operating in Frankfurt. Obviously, there's things that the BaFin and others have done ahead of regulation, but then you've got the EU MiCA rules that will come in a few years' time. And when you speak to the Bank of Ireland, they're smart guys. Ireland's doing well, but they're kind of saying, okay, we can do what we can do under current regulations with MiFID II, but we've got to wait until these MiCA rules come in before we look at what we do on crypto specifically. So again, how do we get that regulatory convergence? Again, and I'd argue we don't have it in the traditional sense anyway. The Securities Act's everywhere, and there might be certain IOSCO principles and standards, right, and best practice, but we don't really have a common standard in the traditional world either, right? I mean, there's a multitude of standards. It's just that now there's hundreds of standards potentially. So do you see convergence?
I mean, I think, first of all, for accounting, I think blockchain is the best thing that could have ever happened. I mean, that's the perfect accounting tool. It doesn't matter if you do US GAAP, IFRS, or the German accounting standard is the best thing that could happen. And I think a lot of Big Four auditors will not have a job in a few years anymore. But anyways, but that's a different topic, definitely. Well, yeah, when it comes to regulation, that's a very, I mean, as you already said, or kind of spoiled a little bit, I mean, we already have this fragmentation in the old world as well, in particular in Europe. Yeah. What I hate about Europe, and I'm a Europe lover, but what I hate is that we cannot agree in so many things. We don't have like a standardized framework within the European Union. Every country has its own rule, its own interpretation of a specific law. And that's why, for example, with certain securities, you go to Luxembourg, let them approve there, then you passport them to the EU. With others, you go, I don't know, let's say to Gibraltar, when UK was still part of the EU, and so on. I believe with crypto now, we really have a chance to actually have a European framework for it. At the moment, we don't really see it. We can see that Switzerland and Liechtenstein are, of course, ahead of the curve, but they are too small to very matter. Sorry, no offense. But I mean, they are not tier one regulators, I mean, Germany, what I'm extremely surprised about is we have always been a very, very conservative regulator. But with crypto, actually, I view the BaFin as completely open. I mean, it doesn't matter what question you have. I mean, we have just been through this process, I mean, our Bitcoin tracker was approved, and it's very, for me, it was surprising, like how open the regulator is. And then, for example, you have the CSSF in Luxembourg, which is completely against crypto. Then you have Ireland, where also people say, I have no personal experience, but they also don't like crypto too much, apparently. So I think it's really, at the moment, extremely fragmented. And for me, it would be great to have a common ground for regulation. and I hope it will come.
You know, it's interesting. The big four the big four auditors will fight back and say, yeah, we want to be the trusted authorities and validators. So we'll see. We'll see how that battle plays out. I just want to spend the last 5 minutes or so speaking about kind of NFTs. I mean, it's a great panel. We could go on for a long time, but you know, certainly, again, we saw a lot of hype around security tokens the last few years. Although you know they were slow to take off, all of a sudden we've seen some crazy headlines as far as NFTs are concerned, and crazy valuations. Whether it's Jack Dorsey in the first tweet, whether it's then auctioning of art, etc. So you know, Melanie, this is a topic close to your heart. You know, on the one hand, there's NFTs, and then you know, I've seen the concept of social NFTs as well. So would you have insights in this area for the audience as well?
Well, it's definitely a very exciting space now after, let's say, the DeFi boom in 2000 that's really started, I would say, in 2020. Now we are seeing kind of the hype coming over into the NFT space. It is exciting because this is what, again, artists have struggled over, or creators have struggled over a very long period of time. How can they participate in the value that they have once created? And if that's now possible through NFTs, which it already has now proven it is, you can, as a creator, as an artist, participate in the ongoing value increase of the work that you have done. This is fabulous. And this is, of course, a little bit against what usually the intermediaries, the art galleries, the art kind of the whole art exhibition space has done so far, that whenever you have once sold an artwork as an artist, you were not participating in this value increase. You sold it to an art collector and it was gone, and the art collector sold it to the next, and everyone was participating, but not the artist. And therefore, this is now inspiring so many additional use cases. I would say we haven't even seen. I don't know, this is just the tip of the iceberg. There is so much beneath, so many more use cases to be found that are exciting and that will innovate various industries, and not only the art or the music industry.
Yeah, no, it's very, very interesting. And before other panelists comment on this, I mean, we're seeing interesting developments, because a lot of these artists, or even some of the film producers, you know, the way they sell their content to middlemen, or even the likes of Netflix and others, they're taking all the risk, they're taking the financing risk, and they're getting kind of maybe a 7 to 10% return. And then some of these middlemen are making a multiple return. And then others like Netflix, you know, obviously given the purchasing power, can extract even more return. So I guess we're democratizing access for whether it's these artists, whether it's these producers, and I think it will lead to better content. Anyone else have a view on NFTs and where they're going?
Maybe I can jump in. So first of all, I don't like the buzzword NFT at all. It reminds me very, very much on when everyone screamed ICO in 2017. And it's the same kind of people who now come to me that came to me exactly the same. So first, I would get rid of the term. What's surprising for me is that it is such a hype now, because since 4 or 5 years, I mean, why I'm in the space is because I believe that all assets, not only financial assets, real assets, will be tokenized one day. And that's basically what the recent NFT hype stands for, I suggest. But I mean, this will, in my opinion, happen anyways. And I want to separate maybe the topic to NFTs that really give you like a unique holding of something digital. So let's take, for example, a JC song. Now someone buys the JC song and can say, I have an NFT that's the original JC song. Incredible. I don't know why this is worth millions, whereas the MP3, which is a direct copy from it, is worth 50 cents. I don't get it because it's the same for me. Maybe I'm just not smart enough to get it, but it's the same. But now if we have real art, a real Picasso, and the holding is now transferred to a token, which gives me the digital right to participate in the value increase and everything, that makes huge sense. So this is how I would more or less differentiate also, or separate the conversation.
Yeah, I'd agree. Yeah.
or the difference is still, a totally new level of fan engagement. So usually the NFT is, you rightly said, it's not a difference, right? It's the other one is a copy and this is an original. And anyway, again, this data is not on the blockchain. The song is not on the blockchain. The artwork is not on the blockchain. It's just an NFT that is created, that is a representation of it. And the question is just, what do we want to represent with it? And therefore, with the music, with this music piece, you can just implement certain ways how the fans can interact with the artist in a totally new way, by just holding it, by handing it maybe over to the next fan in a secondary market, for example, from meet and greet to going in a live stream to just being the first one to listen the next unreleased song. I mean, there are just there are so many utilities that and use cases that can be created with NFTs that weren't so easily created before, and also not in such a transparent way. Yeah. So I think
I mean, if you attach the rights to it, then I completely agree and I love it, because I don't know why there has to be a Spotify, or why there has to be an Apple Music, or why there even has to be a label to manage the artist, if you can do that actually through that. And I completely believe there will be a decentralized way to do this through also NFTs, but only if then the rights are also attached to it, because someone must be the owner of the rights, someone must program the smart contracts, the utility functions to it. For example, now you have exclusive access to my merchandise. Now I can make sure that on the secondary market, my tickets for my concerts are only going away for 20% more than the ticket price originally were, and all stuff. So I completely agree with you, Melanie. I just still think if it's only I just don't get why it's better to have an original JC song if there's no right attached compared to the exact same digital copy. But maybe I'm also missing something if there's no right attached to it.
Yeah, I mean, and this has been a good debate, because people have spoken about, well, actually, it's a pleasure of ownership. Is a first Aston Martin, DB7 off the production line more desirable than the 10th, right, or other things? So yeah, I mean, it's an interesting discussion. I mean, what we're seeing is a lot of these NFT platforms coming into being. They're not really harnessing, as Melanie said, you said, the true potential of NFTs, and really all they're trying to do is kind of replicate, whether it's kind of adapt a security token platform to become an NFT platform and support, let's say, ERC 721 as a different standard. We haven't really seen the real innovation in this space yet. I think it's been marketing and hype, but it's going to be exciting. I think we've run on that note. We've kind of run out of time. I mean, it's fascinating. We could go on for a long time on this. I think the themes that have kind of come out of this is, I think the foreseeable future is hybrid, where we're going to have a combination of decentralized and centralized, and then the two kind of interacting and coexisting. Regulation is a moving feast, but it's evolving, and obviously there'll be cross-jurisdictional cooperation, and obviously further developments in the EU as well. But certainly certain countries are taking first mover advantage. We've seen that with Bahrain and others, and then we've spoken about some in Europe, as you have, Max. Certainly financial inclusion is important. We shouldn't forget it. Again, doing a lot of work in Africa. That's at the forefront, but then a lot of those kind of individuals have embraced technology and have smartphone access. The convergence of kind of B2B and B2C, just as a step point from that, is going to be increasingly important. We come from the exchange background. A lot of those traditional exchanges are B2B. They're not set up to handle retail users directly, and a lot of them are looking at how they get into digital, but thinking, well, how do we really harness that retail flow without aggregating it? So I think we'll see lots of developments. I think it'll be interesting to have this same panel in a year from now and see where we're at, and see how other protocols are doing with regards to Ethereum as well, Max. Because certainly a lot of NFT and security token activity has been there, but Tezos is fighting back as well. So, it's been interesting. Thank you all for some great contributions, and I look forward to speaking to you again soon. Thank you.
The same.
Thank you.
Thank you, guys. It's been a pleasure.
Thank you.
Pleasure.
Pleasure.
Have a good week.